You add indicators to get more confirmation, but here is the truth. Most of those indicators are showing you the exact same thing. You're just hearing the same voice in different accents. In this video, I show you why this happens, what is missing from your chart, and how to actually use indicators to make confident, high probability trades. The goal isn't to have indicators agree, it's to have them show different sides of the market. Most indicators, they're built on price. And if they're all measuring the same thing in different ways, you are getting repetition. Real confluence is when each tool gives you new information. Momentum, volume, structure, trend, when they all point the same way, that's when a trade is strong. But here is a problem. Most beginners don't realize that their indicators are echoing each other. They think they're adding precision. In reality, they're just adding noise. Let me show you the 3 biggest mistakes that causes this and how to avoid all of them. Mistake number 1, momentum overload. Same signal, different wrapping. You throw RSI, MACD on your chart thinking, great, we've triple confirmation. But here's what's really happening. All 3 are momentum tools. They're cousins. They measure the same thing in slightly different ways. So if RSI says overbought, MACD probably agrees, and that doesn't make your trade stronger. It just makes it feel stronger. And in trading, feeling stronger doesn't increase your win rate. Mistake number 2, moving averages in the wrong environment. Moving averages, they look beautiful in hindsight. Put a moving average on there, it hugs the price, crossovers look clean, everything makes sense. But here's a problem. That only works when a market is trending. And the market is trending only 30 to 40% of the time. The other 60 to 70% is doing nothing. Chopping, faking, ranging, and in those conditions, your moving averages, they become a trap. Price keeps crossing back and forth, firing off false entries, stopping you out, dragging your P&L to the mud. The moving average isn't broken, it's just being used in the wrong environment. If you're applying trend tools to a non-trending market, that's like using a surfboard in a swimming pool. It technically works, but you're not going anywhere. Mistake number 3, no volume is no context. Price is only half the picture. It tells you where the market is moving, but not why. Every indicator that's built on price is reactive. It shows you what already happened. Volume shows you what is behind the move. Think of volume as market intent. It's a difference between a breakout that holds or one that collapses, between a reversal backed by real buyers and one that is just on a temporary pause. Without volume, you can't see participation. You're left with a trading structure without knowing if it actually matters. And here's a real trap. Volume is everywhere, but very few know how to read it. More volume doesn't always mean more strength. Sometimes it's exhaustion, sometimes it's manipulation, and sometimes it's real. Understanding the volume is not about spotting the spikes, it's about decoding the context. Without it, you're just trading in the shadow. So if the goal isn't agreement, then what are we actually looking for? We want each indicator to show us a different piece of the puzzle. Let's break this down. First, we have the accelerators. This is your RSI, MACD, stochastic, CCI. These measure momentum. How far the price has moved and how fast. They're great for spotting overbought and oversold conditions. Momentum doesn't mean reversal. Strong trends can stay overbought for a long time. We don't use them to call tops or bottoms. When momentum slows down, that's your cue. Then second, we have our trend tools. This is your moving averages, super trend, ADX. These tell you the direction and the strength of the trend. But here is the rule. Never use trend indicators in a non-trending market. They betray you, false signals, whipsaw, chop. So we ask, is the market clean or messy? If it's clean, trend tools guide us. If it's messy, we wait, we switch tools. And then third, we have volume. Volume is our lie detector. Price can fake, but volume exposes the truth. Volume profile shows you where business is done, VWAP shows value, OBV shows accumulation, and when volume confirms price, that is what matters. You've seen now why Confluence matters, but let me show you how I exactly built it on my own chart. Now look, there are a ton of tools out there. Just because I use them doesn't mean you have to. This is not about copying. It's about understanding why are these tools on my chart, so you can figure out what belongs on yours. You need what gives you clarity. That's why on my chart you won't see any moving averages. You won't see accelerators. Why? Because I rather build my trades around structure, support, resistance, levels that actually matter. And the tools I do use, they help me to read intent, strength, and conviction. Now let me walk you through each one, what it does, how it matters, and how I use it in real setups. The first indicator is better volume. Better volume gives you a lot more information, but for me all the information was confusing, so I just changed my indicators. So every blue volume means this can be an important moment of volume. It doesn't mean that all the blue volume peaks are interesting, but it does mean that if I'm watching a particular setup and I'm waiting for some type of volume confirmation, those blue volume bars will act as volume confirmations for me. Then we go to this relative volume. On every one of my trades, you see here below there is this relative volume bar. Now on this relative volume shows you if volume is increasing or decreasing. Relative volume here is trending upwards. That is a very clear sign that volume is increasing. So I took here a setup which I never should have taken, but relative volume was super dried up. So obviously no surprise that this trade did not work out. And I used relative volume to see is the volume throughout the day increasing or decreasing. And when it keeps on increasing, that's another volume confirmation to add to your position, because volume works as fuel. If the price is moving upwards and it has less and less fuel, then here you can see there's a higher possibility that the price will die. Here's a great example. You can see two great mistakes I made in this trade. I took a setup when relative volume was basically dying, and then I tried to bounce off VWAP on that relative volume. No surprise that this didn't work out. Another indicator that we have is VWAP, that is this line. And I think VWAP is one of the most popular indicators that everybody is using. But what does VWAP actually tell you? It's what the price should be based on the volume. So VWAP can work as a support area, but it also attracts the price at the same time. So for traders who bounce off VWAP, they can go long, or traders who take reversals, they use VWAP as a profit target. The VWAP here on my 10-minute chart is different from the VWAP on my 1-minute chart. Because of the 10-minute chart, I've anchored it towards the open of the pre-market session, and a 1-minute chart, I've anchored it towards the open of the trading day. Another indicator that I have that I think is very useful is on every chart, the close, the previous day high, the previous day low, and the pre-market high and the pre-market low are plotted on my chart. They can work as support and resistance, and for me it's essential to put them on every chart. In the past I have totally forgotten about the support of resistance of those levels, and that way I don't forget them. And then my fifth indicator is the volume profile that is here plotted on the side, but in all honesty, I don't use it so much. I kind of can remove it from my chart. So here on the side, you see here the volume profile. I've plotted it, I think, of the last 5 days. That works the same way as VWAP works. A lot of volume attracts the price, but it also works as a support and resistance. So if you have a key level and with a high volume profile, that gives you more confirmation in that particular key level. And then obviously you see here on all my charts, I have 3 windows. I have the daily chart, I have the 10-minute chart, and I have the 1-minute chart. I see on the 1-minute chart needs to make sense on the 10-minute chart, and it definitely needs to make sense on the daily chart. If they're not aligned, then your trades will have a lower probability. The more things that are aligned in your direction, the higher probability your trades will be. You know what? Let me show you it on one of my trades I took today and go step by step how we will work with Confluence. So the first thing is I check here my scanner. This is my scanner on my broker. I have a particular video how you can just find free scanner. What I'm looking for is I want to have stocks that gapped up or gapped down with significant amount of volume and have their own catalyst. So these are the three criteria. Do they have a significant gap up? Do they have a significant amount of volume? And do they have an individual catalyst? And for small caps, you preferably want to see at least 5 times their regular volume. And then I go to the second criteria. I check the daily chart and I want to see how much potential is there up there. Are there any major key resistance levels that I need to take into account? Does this stock have enough upside, or are there certain resistance levels that will hold me back? There needs to be a key structure in the key levels. This stock is like testing these highs. So you can see it is testing these highs, and pre-market you can see it is testing the exact same highs. So then I will be looking for a gapper, individual mover with a gap. It has enough upside, it is bouncing, and it's there against the key level. Okay, 3 requirements met. And I can check the volume profile. Is there any clear resistance ahead of you? Or it can also help you with where to place your profit targets. So when everything lines up and the volume confirms, then I enter my trade. Here you can see today was a little bit messy. I tried it on the break, didn't really hold, got stopped out. Then it respected view up, so I decided to re-enter. Now you have my captured the whole move upwards, but we can check here my second entry here. We were making here a new top. It broke out with volume, got halted upwards, and then I sold half my position later. Little runner run. When everything lines up, then you want to see a clean break. So when all those criteria are met, then we start looking for the price to break with significant amount of volume. And then I want to see truly a volume confirmation. And therefore I will be looking at the R-vol. Is it trending upwards? That's a clear indication that volume is increasing. Do I get a blue candle on better volume, or do I have a confirmation on level 2? So when I have either one of those, when I have a volume confirmation, that is for me a high probability setup. This is confluence. Daily chart is room to move. Key level is structure. VWAP is trend plus control. Better volume plus time and sales is strength. R-vol is context. Volume profile is space. And when they all point the same way, that's when I pull the trigger. But here is the part that most people don't want to hear. This setup, this system, this process, it's not magic. And it's for sure as hell not easy. There is no shortcut. No book, no course, no mentor can do this for you. You have to build it yourself. I can show you what matters, but unless you're obsessed with mastering this game, nothing will change. This is trading. This is life. The 99% dabble, the 1% decide. So if you're serious about getting to the next level, don't just watch this video. Start becoming the kind of trader who earns their edge. And if you want to know exactly what that journey looks like, step by step, you have to watch this video. The 4 stages every trader must survive before they become profitable. It's not motivational fluff. It's the truth about what separates the traders who make it from the ones who quit. But you know, because if you don't know what stage you're in, you're already losing.